So it's 2022 and you're a mobile home park owner, and a lot of the people that have talked to you about buying your park are now saying, listen, interest rates are up. It's not worth what it used to be back in, let's say, November 2021. Stick around in this video because I'll explain to you, one, why that is, and two, what your solution to that problem could be. So what's up, guys? Armand, MHPValue.com. So getting into the video, a lot of the buyers you're talking with, they're saying interest rates are up, so your park is essentially worth 20 to 25% less than it was about a year ago. The reason for that is with rising interest rates, the cost of debt is way more expensive. So when these investment groups that are talking with you are going to buy your park, they're looking at what kind of returns based on the cash flow and improvements they can make to the park they could get, so that way they could pay their investors returns. So ultimately, it's not what they want to buy, so to speak. It's really how could they get their investor returns, which is why there's so much aggression in the market to pay high prices for strong assets like your mobile home park. If the cost of debt is more expensive, then your monthly cash flow is going to be less, which hurts the evaluation of your property. And then on top of that, now that we have higher interest rates than before, if they end up stabilizing at a higher rate than they were before, now when I'm assuming I'm holding the property for 5 years and I'm going to pay my investors X amount of money in this 5-year period, my assumption on cap rate for when I sell the park at the end of the 5 years and get a big return is going to be significantly lower than when interest rates were at 4%. Now, there is a way that you can get around this as a seller, but it might not be optimal as far as what you want to do with the park, but this is the way the world works. If someone was assuming they were going to buy your park with 70% LTV and a 4.5 or 5% interest rate from a bank on a 20 to 25-year amortization schedule, what you can do now, since they can't get it from a bank, is that you owner finance it to them. Now, this is only possible if you have a small amount of debt or no debt on the property and have owned it outright. And I know a lot of you who have mobile home parks are familiar with owner financing, but it's getting to the point now where interest rates are so high and lenders are so tight on what they're going to finance that really the only way for you to get these very high prices you're looking for is that you give favorable seller financing terms to the buyer, which lines up with their returns. So when I'm looking at a park to buy, or I'm looking at evaluating a park, one, I'll tell you where it's going to line up based on bank financing terms that are out there, because I'm constantly talking with different mortgage brokers and closing deals. So I know month to month what kind of general terms you're most likely going to lock in for bank debt. With seller financing, though, there's no real set thing, so you can get really creative on it. And what I mean by that is, let's say you don't want to do a super low interest rate and you want a sizable down payment. Let's say you want 35% down and you'll finance it at 6%. At least you have the ability to get creative and maybe give 3 years of interest only on the front end and a balloon payment in year 5. Or maybe you'd rather have higher payments and you're not too concerned about money up front, but you want to make sure you get paid in a short amount of time. Maybe you do low down payment, high interest rate, no interest only, but 3-year balloon, depending on what type of value add and improvements someone can make to the park. But there's a lot of ways you can get creative with seller financing, but it seems to be that now that bank financing is significantly worse than it was the previous 7-8 years, the only way you're going to get these very high prices you've been hearing about is if you owner finance, so that way buyers can get their investors the returns they promised. Now, I can make an hour-long video about how to structure seller financing in different ways that affects the numbers, but it's very specific to what your park is in your market. So the best decision you can make on this is sign up for a free evaluation on your park at our website, MHPValue.com. We've underwritten over $5 billion, billion with a B, of mobile home parks. So we'll be able to model out a bunch of different scenarios and what the most favorable seller financing terms are that you could offer to buyers on the front end. So that way you could start the conversation off getting that high price that you want rather than being negotiated down by this significantly more expensive bank debt. And now you're just starting from a lower point and not ultimately maximizing the value you could on your mobile home park. So again, if you're thinking about selling, MHPValue.com, or you can reach out to me direct, contact at MHPValue.com, or call or text me 561-596-8487, and I will be happy to help you 100% free of charge.